Oh boy, here we go again. Buckle up, CPI report coming out tomorrow. Now, you know we're going to get some crazy volatility around that CPI number tomorrow morning. What we don't know, though, is how will these markets react to the big inflation number that everyone's been waiting on all week this week. So I have a number of different scenarios, different game plans we'll cover in tonight's video. By the time we're done tonight, you'll have an easy roadmap to make some money on Wednesday morning as well. So charts ready to go here. Enough of the intro. Let's go make some money on CPI Wednesday. Boy, charts look fantastic tonight. Nasdaq triple Qs are all ready. The Emini and the SPY is ready. I have three very simple but very important clues that are tipping us off to where I think the winning trades, the money-making setups are waiting for tomorrow. Clue number one is right here in front of us. We are bullish overall on the S&P SPY, bullish overall on the Nasdaq and the triple Qs. I like to use these hourly charts as an overall directional filter, the overall directional bias. So clue number one, overall bullish on the higher time frames. Clue number two is on the calendar. You probably know this already, but if you don't, buckle up. We got the biggest news of the week, possibly the biggest news of the month coming out tomorrow. As I mentioned before in the intro, we know we're going to get some volatility around that number. We just don't know how the market will react to that. We'll talk about some game plans, some scenarios in this video. Clue number two is expect some volatility around that CPI report tomorrow morning. And clue number three is not on the hourly chart. It's on the tick charts. We use tick charts in our trade room because tick charts are based on volume. They're based on transactions. They make pattern recognition a hell of a lot easier. All the time frames you'll need, by the way, in the upper left-hand corner. That's a 7,000 tick chart here on the S&P. And that is the 21 EMA, in case you're watching here, tuning in for the first time. Clue number three is the size of this move we've seen over the past really 2 days now. Up and up and up and up and up. Now, we know that anytime we see a big move like this, we don't want to buy way up here. We don't want to buy high. We want to buy nice and low. So put those three clues together. Bullish overall on the higher time frame. Volatility expected tomorrow from the CPI report and a big move up. I don't want to buy high. I want to buy low. So if we anticipate a pullback, we anticipate what might be a very sharp rug pull off of this high with that news number tomorrow morning. The most important thing I want you to remember is if we get a bit of a rug pull, a real sharp pullback off the highs here, all of that momentum off the high is going to want to pull back and retest that low before we go back up and retest those new all-time highs. Why is that important? Well, because of all of that momentum on that rug pull style correction, I'm going to use two different types of entry patterns. One on the initial move down and the other on the retest of that low. For example, as we go lower, my main goal is I want to buy as low as I possibly can to avoid that run back over. To do that, this is where we use what's called a trap pattern. In this case, it's called a bear trap pattern. Now, bear traps are very, very simple. On the move down, I don't know how far that rug pull will go. What I do know is that this is a horrible spot to be selling. And I know that as it goes higher, it's going to want to retest that low before it goes back up again. So knowing that, I want to get one try for the bears, two try for the bears, higher high in price. I want to get right below that low and then look for a nice, strong green candle closing above that 21 EMA. Now, the goal on this, obviously, if we're lucky, it'll go all the way back up and take out that high. But the goal on this is the size of that signal is the size of the first target. And again, maybe it keeps on going all the way back up to retest the high, but it may not. It may hold the underbelly of this range, and it may run back down to take out that low. The first trade here, in fact, I have 5 trades I'm watching for tomorrow. Trade number one is a bear trap pattern, just like I teach in the free video classes, right? It's trapping in the bears, buying as low as I can to protect myself for the rolling back over and retesting that low. Now, the good news is once we retest that low, Anybody who sells short up here, they're taking their profit down here. Sellers up here become buyers down here. The bottom line is I can be a lot more aggressive on this entry now. This is where we can use actually a combination of two different setups because we know this is a horrible spot to be selling, right? You wouldn't want to sell into that area. And I also can't pick a bottom on this. What I'll do is I'll use a similar entry pattern, but this is one I call a failure pattern. Bears once, bears twice. Now, why twice? Because I want those stops, right? I want those sellers, their stops to be there so I can squeeze those stops for a run back higher. Now, pay attention because what we can do is we can string together this failure into another one of those bear trap, I call these bear trap combinations. A higher high in price and a move right below that low. In our trade room, we call these failure patterns into trap combinations. So again, I've got 5 trades I'm watching for tomorrow. Trade 1 is on the initial move down. It's a bear trap on the initial move down. Gotta be buying as low as I can in case it rolls over and takes out that low. Trade number 2 is kind of a double bottom retest or retest failure. Failure pattern, it's 1 try, 2 try, squeeze those stops. Then as we go back up to retest the high, it's a simple bear trap pattern like I teach in the free video course. Those are 2 out of the 5 trades, 5 scenarios I'm looking at for tomorrow. One more variation of this I want to cover. A lot of times what happens is we'll get that strong run down. It'll pop up and it'll make a measured move going lower. Anytime we see a news spike, I can use the size of a news spike as a measured move, okay? That will give me an area of support down here. But remember, all of that bear momentum. I know we're bullish overall, but remember, short-term traders, we have to respect short-term momentum. So basically, we do it all again. Once we take out that measured move, we don't pick the bottom on this. We look at that same. What was it again? It's a bear trap, right? It's 1 try, higher high, 2 try. I want a trap pattern to buy as low as I can. Now, hopefully, it'll rip back up. Well, I'll make a bunch of money, right? But it may not. It may run up. It may roll back over and I'll be happy. I've got my 1-to-1 target, my stop up to point of entry, right? It's a winning trade. I'll be happy though. I've taken the profit quickly and not buying high as it goes higher. Once it retests that low again, that double bottom retest, right? It's bears once, it's bears twice. I can be a lot more aggressive on the retest trade because now all the bears in here, they become buyers right here. These are rookie sellers selling into that area right there. It's a failure into trap combination. Now, let's slow down for a second because we've covered a lot of stuff so far. This is the 3rd trade out of 5 trades on my radar for tomorrow. I know that most of you guys watching right now, you know these patterns already. You're making money with them. But if you're here for the first time right now, this might be a brand new language for you, a brand new strategy that you want to learn. So I teach this entire roadmap. I have a ton of examples of failures, traps, news, measured moves. I cover so much more of this in our free video classes. What I'll do is I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up right there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up, take that free video course. Everyone loves the free video classes. It is perfect for anyone who's serious about making money in these markets. Also be aware too, I'm going to put all the important links we talked about tonight in the description of the YouTube video. I'll put the free class links down there. We trade together every morning in our trade room. I'll put trade room links in the description of the video. And also too, I post a lot of charts and videos and updates on Twitter or X as they call it these days. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more are linked in the description of the YouTube video. So I mentioned earlier, I have 5 trades I'm watching for tomorrow. Remember, the initial rundown is that bear trap. The second trade, of course, was the retest trade, that failure into trap combination. The third out of 5 trades is if we end up getting a strong rundown into a measured move. It's basically the same thing. It's a trap on the first attempt going lower. If it rolls over and retest, it's that failure going back up from there. I think that all makes sense, right? Okay, I have 2 more trades I'm going to talk about for tomorrow because, like I mentioned earlier, I don't think anybody knows what these markets will bring for us. Let's go talk about trade number 4 and trade 5. Now, before we talk NASDAQ, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. That small action takes barely any time for you, but makes a huge impact on my YouTube channel because I get rewarded every time you like, share, and subscribe. I know we're all busy people these days. I appreciate you guys spending some time with me every evening on these videos. So thank you so much for the likes, the follows, and the shares. Now, let's talk NASDAQ. You probably already know this already on the 60-minute time frame. We're definitely bullish on the NQ and the triple Qs. I mentioned earlier too, we don't trade off of time charts in our trade room. Let's go grab some tick charts here. This again is a 4,000 tick chart, upper left-hand corner. And once again, just like on the S&P, we have this huge move over a 2-day period. We know we're going to get some volatility off that number tomorrow morning. I'm expecting to get some sort of rug pull. We talked about 3 out of the 5 trades I'm watching already. The initial move down, the double bottom reversal back up, and again, the potential for that measured move and run back up again. We covered those already. That still applies here on the NASDAQ. Now let's talk about trade number 4 and trade number 5. We may not get that rug pull tomorrow. Who knows, right? Tomorrow we may get another leg going higher. If we get another leg going higher, trade number 4 for tomorrow is a 2-legged pullback. If this thing keeps on going higher, we simply don't want to chase after it. What I'll do is wait for a 2-legged pullback. Now, when I say 2-legged pullback is very simple. Think about a measured move that goes a bit too far. Think about, we saw one today, right? Think about a measured move that goes a bit too far. Now, what happened today? Once we saw that 2-legged pullback, what happened? The bears tried once, the bears tried twice, and we squeezed and ran going higher. That's exactly the game plan we'll look for tomorrow as well. Trade 4, if we end up going higher here and this news number tomorrow takes us higher, I want to get back around that moving average. I want to see first leg. I want to see second leg. Again, think about a measured move that goes a bit too far. And remember, this may keep on going lower. I don't have a crystal ball, and we do expect a lot of volatility in the wake of that number tomorrow. So rather than trying to pick the bottom on this, what I'll do is I'll look to trap those bears in like we did over here this morning. 1 try for the bears, 2 try for the bears, 1, 2. Why 2? Because now I got you trapped. Now your stops. Think about this. If you're caught short and you get stopped out, the only way out is to buy your way out. That's why failure patterns and bear traps work so well. A failure pattern on that 2-legged pullback. Now, as we go higher, the market wants to go back up and take out that high. What is the next entry pattern we look for? It's always going to be that trap combination. Now, trap combinations, what you want to see is, you want to see a shallow pullback and a higher high in price. The best bear traps are going to separate off the 21 EMA. They're going to give us a higher high in price, and then we'll get right below that low. Remember, traps are effective because they get us in as low as possible. So important because we don't want to buy higher as we're going higher. I want that failure, trap the bears below 21 EMA, and I want that bear trap. Separation off the moving average, higher high in price, and that trap right below that low. That is trade number 4 out of 5 for tomorrow. If you keep going higher, don't buy high. I'm going to buy that nice deep pullback. Do that. I want that two-legged pullback a bit more than a measured move. The fifth and final trade scenario for tomorrow is a trading range, one of my favorite types of markets. We may not, believe it or not, the markets may have already priced in a good CPI number. We saw that big run up the last couple days here. The markets, they may have already priced in a good number tomorrow. If we wind up going sideways, which is in all reality one of the more desirable situations for tomorrow, because once you learn how ranges work, you will wish every day was a range day. Now, two things you want to learn about ranges. One is that ranges act like magnets, and two, ranges love to rotate. So once we find the trading range, then we know where the magnet is. Then we simply look to trade the rotation back and forth. The most important thing about range rotation is symmetry. The amount below the range, the amount above the range, the amount above the range, the amount below the range. Combine that with expanding triangles or megaphones. Ranges love to rotate back and forth using pendulum swings, symmetry, and using triangles or megaphones, expanding triangles. So if we understand that basic idea of how ranges work, once we pick up on where that range is for tomorrow, all we do now is look for levels of support underneath that trading range, wait for a breakout. Remember, we don't pick bottoms. We don't blindly buy off areas of support, and I don't trust divergence. I don't read tape. All I do is wait for the signal that bears have committed. Once those bears have tried a couple times, now we know where the stops are. In my experience, the easiest way to make quick money is to trap sellers, in this case, an overall bull market, and squeeze their stops. That's a failure pattern like I teach in the free video course. And as always, it's always that trap combination. That's the most reliable way to add to your winners or to jump back in as it goes. Now, these can be very lucrative because what happens during ranges? They like to rotate, right? The amount below the range, the amount above the range. What I always do is take a good chunk off, half off, 3/4 off at the other side of that trading range, but leave a runner in a range environment. One well-held runner can make your entire week. So if the markets have priced this in already, if we get all slopped up in a range tomorrow, I'm going to look left, find areas of prior support or prior resistance I can use as support, wait for a breakout, failure, into bear trap combo, and then let that thing run, right? Let that thing run as it rotates back and forth. Where things get really fun is when we see a fake out breakout. This is where things get kind of fun in our trade room. If we go sideways in a range up here, and again, this is probably not where the range will be. We'll find that tomorrow morning, of course, in our trade room. But once we know where that range is, oftentimes what happens is we'll go higher first. Right now, remember, we're already way high up right now. This is not a great place to be buying. If it does really continue, what I can do is begin looking for breakout pullbacks off of that trading range. We'll cross that bridge once we get there tomorrow morning. But chances are, if we go sideways up here after such a big move the last couple days, chances are this is simply a fake out breakout or a bull trap above that high. These oftentimes will come crashing right back down again. Now, once you know how ranges work, these become pretty easy. This is not a reversal, right? This is simply a rotation off the high of that range. But I'll tell you right now, this will feel like a reversal. It will feel like this thing is rolled over and destined to keep going lower. Rookies, I know this for a fact because I was somebody who got fooled by this all the time when I was a rookie almost 20 years ago. Rookies will chase after this. And this is why this one gets fun, because you can almost hear the rookies' pain when they get stopped out of these moves on the side here. Again, bears once, bears twice, especially after a rotation off the high like this. Trap them in, run their stops, because I don't know how far it'll pull back. It may overshoot that pendulum swing by a little bit. What I do know though is that this is a horrible spot to be selling, not in an overall bull market, not after a big move higher the last couple of days, and certainly not when I can easily measure the amount above down below and find some really obvious areas of support down here. That failure pattern into that trap pattern combination, and you know how ranges work. They love to rotate. So again, I'll go quarter off, half off, top of that range, measure the amount we go below, project going higher. That will give you that final target back up on the other side of the range rotation. If you want to make more money, don't trade more often, trade a bigger position size and get better at holding on to your winners. Ranges make it really easy to know where that winner wants to go. Right, guys? Those are 5 trades I'm watching for tomorrow. That's the game plan for Thursday morning. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, every morning, come trade this stuff with us, guys. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. Once again, I'm going to put all the important links you'll need to learn more and hopefully earn more with us. Description of the video. Start first on the free video classes, and hopefully I'll see you sometime soon trading with us in the trade room, 8 o'clock Eastern time with all the SOT members here at School of Trade. All right, guys? Hope you learned a bunch this evening. Hope you use this knowledge to earn a bunch tomorrow. In the meantime, be well, be nice to each other out there, will ya? And you better be here next time. Adios, amigos. Bye for now.